Hello guys, this is David and I'm also known as the Spread Doctor. And this is my journal for Friday the 6th of November. The equity markets had a flat day today, and it's quite understandable to have a flat day given that since the election day, either Wednesday or Tuesday, the market has gone up by about 8%. And posted gains of about 8% since Tuesday. Let's call it Tuesday. So it's only natural to take a pause and consolidate the gains made over the week and have a quiet day, if you like. And at the closing bell, the Dow was down about 0.24%. The Nasdaq was up about 4 basis points or 0.04%. And the S&P 500 was down about 0.3%. So it was a non-event today. The markets were just consolidating the gains made over the week. The stock of the week for me is Biogen, ticker symbol BIIB. This is a chart of Biogen. And you can see that it took off like a rocket on Wednesday. Here is Wednesday. Just look at that candle there. I mean, the day range it goes back to around February. All that in a day. It took off like a rocket on Wednesday after there were some whispers on the street that Biogen was about to get FDA approval for its Alzheimer's drug. And apparently some FDA staff said they had enough data to support an approval of the experimental drug. And on that rumor, news, whisper, call it whatever you want, the stock took off. Come Friday, the stock was halted. It didn't trade on Friday. The FDA on Friday unexpectedly declined to endorse Biogen's experimental drug by a vote of 8-1 against. So 8 people voted against it and only 1 person voted in favor of it. And the stock was halted. It begs the question, who was behind the story that hit the wires on Wednesday about an approval being a near certainty or being imminent? This looks like a clear case of pump and dump, and I'm sure some retail investors are going to incur some heavy losses on this stock when it finally starts trading again, when the halt is lifted. I was hoping to do a trade on it on Thursday, but the spreads were as wide as the gap between the two sides of the US electorate. Let me show you how wide the spread was. So this is BIIB. And go to my trade tab and have a look at the December contract. Now I was looking at selling the 375 calls. Here you go. I mean, look at this crazy spread. 375 calls. 890 to 1650. And I was unable to do anything. I mean, the spread is just so wide, you couldn't put on a trade in there. And it's not unusual. I mean, BIIB usually has really tight spreads. But given that it's been halted, I mean, you can see, I don't know if you can see this here. It says halted. Given that it's been halted, implied volatility is just going to spike through the roof. Where is the IV on this? IV is 66. I'm sure when you start trading, that could go up to about 100. So that's why I couldn't put on anything on BIIB. I would have loved to sell a call spread in it, but I couldn't because the spreads were just way too wide. So I talked about my stock of the week. I'm also going to have a sector of the week, or maybe not an entire sector, a subsector or subgroup of the week. And that would have to go to cannabis or the pot stocks. Let me do this. As the odds of Biden becoming the next president-elect increased, so did the price of cannabis companies. I'll leave you to draw your own conclusions on what that says about Biden's appetite for pot. I mean, how much can this one guy smoke for the price of pot to go through the roof on him being elected? But on a serious note, look at companies like this one here. Aurora is now up over 100% since election day. And many of the other ones are up in about the same ballpark. And the cannabis trade is being driven by, in part, 5 states, including Arizona, New Jersey, and Mississippi, legalizing cannabis in some form on Tuesday. And I think the street is also betting that Biden might be willing to legalize cannabis at the federal level. But even though these stocks popped really so much, I mean, Aurora is up by over 100%, Canopy up about 70%, I think. But even though the prices popped, IV remained quite low or subdued, and I couldn't find any trade ideas. Let me just show you the IV in these stocks. So Aurora, ACB, IV is quite high in this one, 51.8. But then it has earnings coming out on Monday. It doesn't show that here for some reason, but earnings are out on Monday. I checked it on another site earlier, and earnings are coming out on Monday on this one. So that explains why this one has IV, high implied volatility. If you look at one of the other ones, Tilray, TLRY, Tilray's implied volatility is about 42, and Canopy, I love the symbol for this one, the ticker symbol. I mean, weed, but Canopy hasn't got any options. It's not an optionable stock, so there are no options in it, and that's why it's not coming up here. But that is a cool symbol for Canopy, weed. I wonder if anyone gets fired for smoking weed at this company. But I don't. Let me move on. And there has been a volatility crush in the VIX. The VIX was down about 9.8% today to close at 2486. And I think it's likely to trend lower or consolidate around or above the 20 level. Given a big cloud of uncertainty about the election has been lifted, it's not a surprise to see the VIX come crashing down because what was uncertain is now becoming more certain. But that said, 20 is still pretty high by historical standards, and I should be able to find some spreads to sell over the next coming days and weeks, and I'll keep looking. And that takes me on to new trade ideas. I had no new trade ideas today, but there was one trade I was looking to put on, and I will revisit it on Monday. And I was looking to put on a trade in UNG, which is a natural gas ETF, UNG. It's been on my watch list for some time. I wasn't particularly looking at doing anything in it until today. IV is quite high. It's a $10 stock or $11 stock. So the choice of strikes and not that many, and I wouldn't be able to do a $5 wide strike. So the trade I was looking at was selling the 10-9 December put spread, only a $1 wide spread. So I was looking to sell the 10 and buy the 9, and I think that was giving me a credit of around, so currently, well, the mid as at the close is at 24. I was hoping to get around 30 cents, but the spread over the entire day went as high as 27. It never quite hit the 30 level, so I decided not to do anything. The one thing to bear in mind with this trade idea is that it's $1 wide, and one would have to sell an awful lot of contracts to meet the same allocation as a $5 wide spread. And should I put on the trade on Monday, I'll advise you to use the position sizing spreadsheet that I provided in the Trading Strategy 101 forum to work out how many contracts are appropriate for your account size. I'll use my account size to illustrate how many contracts I'll carry, and then you can do the same thing for your account. So this is the main forum list. I'm going to go to Trading Strategy 101. I'm going to go to minimum account size in dollars and position sizing. And here is a spreadsheet that I have attached called position sizing. Let me just launch it. So this is the spreadsheet. Account size, when I started, my account size was 5,000. It's now about 9,000. So I'm going to change that. You change it to whatever your account size is. The spread size, I left it as 5. I'm going to change that to 1. The credit received, I'm looking to receive about 30 cents. And that tells me that I can trade 32 contracts to give me an allocation of $2,250 exposure on this one trade. I might round it down to 30 on mine. So there you have it. If my account size was, say, 5,000, then I would be able to trade about 17 contracts. So because this is a $1 wide spread, you could use a spreadsheet to calculate how many contracts would be ideal for your account size. Another thing to bear in mind with the $1 wide spread, given that you're going to be trading, or I'll be trading quite a few contracts, about 30, the commission on this trade is likely, or is going to be higher than a $5 wide spread where I would trade 5 contracts. So that's one of the downsides of trading smaller width spreads. A $1 wide spread means you need to trade more contracts, means you need to pay more commission, as opposed to a $5 wide spread, you trade fewer contracts and you pay a lesser commission. Moving on to my open positions, I now have one open position in SLV for the November contract, and I also have one open position in the December contract for ARKK. On the SLV one, which is this one here, I sold the 22.19.5 put spread for a credit of 52 cents. Let's see what that position is doing at the moment. So SLV closed today at $23.79. My short 22 put is currently quite comfortably out of the money, and all things being equal, this position should close out early next week. My profit target to buy this spread is 15 cents. I'm going to go to let's go to my activity tab to see that. So I set my profit target to buy back the spread at 15 cents, and the mid price at the close was 18. So hopefully this position should close out early next week. All things being equal, either Monday or Tuesday, we should be able to hit the 15 cents target. My P&L, I'm going to go to the portfolio tab now. My P&L on this position is positive P&L of $34 per contract. This is the open P&L here. This is the P&L that accrued only today. This is the total. This one here is a total open P&L. And you can see for SLV, I've got a positive P&L of $340. I sold 10 contracts. So that works out P&L of positive $34 per contract. My second open position is in ARKK. ARKK, this is a position that I opened this week. I sold the 91.86 put spread for a credit of $1.30. At the time, ARKK was trading at $97.29. Let me see where ARKK closed out today. So ARKK closed at $102.08. My short 91 put is currently out of the money. No action is required on this one. And at the end of week one, because this thing was opened during the week, I think it was on, is it Tuesday or Wednesday? It was open this week. At the end of week one, I now have a positive P&L of $58 per contract on this ARKK position. My open P&L is 287.5, as you can see there, and I traded 5 contracts, and that's how I get the $58 per contract positive P&L. And that brings me to the end of my journal for today. The main highlights, I got on board for the December contract and opened a new position this week in ARKK that I just covered. Implied volatility has been crushed this week, but the VIX remains above 20, and I'll continue to hunt and search for spreads to sell over the week, so watch out for the trade ideas alert. I hope you enjoyed listening to my journal. You can leave any questions or comments below, and I shall try my best to answer them. Have a fantastic weekend and see you next week.